Well, we've made it to the second week of June. We are full on summer at this time and want to bring you the latest data here in the Austin metro area. Well, I've got some good news to share when it comes to Austin. Not only is it a top market just for people wanting to move here, but also for companies wanting to move here. I'm going to share that story with you at the very end of this video. But first, we're going to look at April data, May data, and June data to give you a picture of how Austin is trending as we move into the second half of the year. I've got the latest national forecast from Redfin. I'm going to share that with you, latest on mortgage rates. And of course, we'll get to that good news. So we're going to start with April data. And again, this is looking at 5-year trends. You're going to see these 5 bars here. So what we're looking at for 2025 is the green line. So this is number of sales, just how many people are buying in a given month and closing. You can see we're neck and neck with in 2023. We were low there. Last year, we actually had more sales at this time, but we've dipped. And in 2023, we had high rates also kind of hit the market at that time. So we're seeing kind of, again, anemically low number of sales. This is volume. This is dollar amount. And again, we're neck and neck with 2023. Again, that is just on total volume of contracts. This is the median sales price, is what everybody thinks about. So if we look at the price and we look at the last 4 years, this is 21, 22. 22 is up here, the crazy bubble. But if we look at 21, 23, 24, and now 25, we're all within about 15, 20K of each other on median price. Yes, we're lower. So we're seeing the prices still softening a little bit, but we're hanging in there in terms of that. We've kind of found a range where that median price may be starting to stick. So pay attention to that. Average sales price, again, it's going to skew a little higher because if you have more luxury sales, that pulls that up. But again, seeing that average price really dead even with 23 and 24. So the last 3 years, we've seen that average sales price kind of stay the same. But the big story is supply. This is total listings. And if you look at every year, we've increased by several thousand homes each year on top of each other in terms of how much supply do we have at any one time. If I go back to 2021 in April, we had 1,800 homes for sale. This year we had 13,000 homes for sale. So just a rocket ship of more sellers hitting the market compared to the buyers that we have out there. So this is the total market. And again, months of inventory kind of expresses the same thing. You see a large climb. So this is Williamson County. Let's dive into Williamson, Travis, and Hays. So if we look at Williamson County, obviously number of home sales below the last 5 years, sales volume below the last 5 years, median sales price, there we are, kind of bunched together. So the price is kind of hanging in there. We just have anemic sales. And so it doesn't mean that homes aren't coming down in value if they overlisted or things like that. Not every home is going to sell. So sometimes sellers aren't just going to drop their price to zero. They're just going to take it off the market. Wait till next year. So this is a reflection of those willing to sell. And we're staying kind of steady on that median sales price. Average sales price, again, neck and neck with last year. But there we are. Total listings, green line, way above last year. Almost 1,000 extra homes for sale in Williamson County than we have seen in years past, and months of inventory still climbing. All right, Travis County. This is going to be Austin and the suburbs east and west. Again, same story. Number of home sales, we're seeing it on the low end. Sales volume, again, on the low end. Median sales price, there we are. April just bunched up like it's all tied together. So the price is kind of hanging in there, but you see those lines start to differ as we get later in the year. So we're going to be watching that and kind of see what happens to price as we haven't had this much inventory going into this part of the summer. So is it going to soften prices harder the second half of this year? That's what we need to pay attention to. Average sales price, again, looking okay. And there we are. Total listings still climbing. This is April. We've already had May, so this data is about 6 weeks behind. So we'll see where that's peaking out. I'll show you some of that here in a minute. Months of inventory still climbing. And finally, Hays County, sales a little higher than the last 2 years, so that's good, but dropping a bit. Sales volume, again, coming down. saw some downward pressure. I think rates went up this last month. Median sales price, again, trending with last year. Again, neck and neck within a few dollars. Average sales price, a little higher. So they're getting a little more sales volume. Total listings, higher, but not as bad as Williamson and Travis County. So it is higher than last year, but again, not quite as aggressive. And months of inventory climbing. All right, so this is going to get us over to May data. So now we've come out of April, we're moving into May, and there we are. We're leaning towards a buyer's market as a total metro. There are pockets of the market that are less than this, where we're only seeing 2, 3, or 4 months of inventory. And then there's other parts of the market like downtown and some of the hot, expensive zip codes where we're seeing well over a year of inventory in the market. So balance just means we've got about 5.5 sellers for every one buyer that's going to write a contract in a given month. So we're skewing to a buyer's market because buyers have a lot of supply, which is reflected right here. If we look at May supply, that's the dark blue line. The dotted blue line is last year's supply, and the gray bars on the bottom right here are the 10-year average. So if on average in May, we would have had about 8,700 homes for sale. Last month, we had 14,500. So we had 6,000 more homes for sale than normal. That's a lot of homes because if I go over to demand, and again, here's our 10-year average. We typically peak on the number of sales in May, which is April buyers closing in May. Now we've got May buyers getting ready to close in June. But we look, demand is down off the 10-year average, a little above last year. But we had about 3,000, maybe 3,100 buyers writing contracts and closing in May this year. But we've got 14,500 homes for sale. So literally all the buyers that are in the market right now are simply just buying the additional homes above last year's supply. We're not even eating into that supply. So supply continues to climb, and that's what we're going to need to watch. So let's get into current data. This is number of active versus sold listings in the market. I show this to you almost every video. I think we might be peaking on inventory right now. So on the far right, we've got June. And of course, June hasn't finished yet. We're still got 2/3 of it to go. But if I look last month, we had over 15,000 single family homes for sale in the market. But we may have also peaked on closed sales, which was just over 3,000. We had about 3,050 sales. There's probably going to be a few more that get recorded in the MLS in the next, week or so as they wrap that up. But ultimately, let's say we're getting 3,000 buyers, but 15,000 homes for sale. Do the math. So it's going to take a while. Even if no new sellers come on the market, how long would it take to sell all the homes that we have the rest of the year? If no new sellers came on the market, it would take the rest of this year to sell through this inventory. But you and I both know, I got new listings coming on the market this week, next week, the week after. So there's still sellers coming to market. So just know not everybody's going to sell in 2025. It's just math. And last year we peaked out. We're probably already 1,300, maybe 1,500 more homes on the market now than we had at the peak of last year. So that is supply. We're going to have to pay attention to that. This is original price versus sold price. This is not per house. This is just if you take the market as an aggregate. What it tells me is typically pricing gets a little tighter as inventory gets tighter in the winter. That's why you see the bars a little closer together at the end of the year. And then you get into the spring and everybody gets optimistic and starts raising their price and gets all excited. But of course, then you have a much bigger gap between what people are asking in the market versus what buyers are paying in the market. So, but in January, our average closed median price was 405. We peaked out so far in April around 446. In May, it was down a little bit. So again, we're going to have to watch that. Have we already peaked on price this year? Something to pay attention to. June is too early, so don't want to judge those lines. Finally, here's historic sales price trends. So if you're curious what's happening, obviously, entering the pandemic, Austin's median price was $300,000. We were a very affordable big city going into the pandemic. And of course, everybody agreed. So they all came and dumped all their money here and made Austin take off like a rocket. And of course, rates went up, cooled us off. But if you look at the last 3 years, which is kind of the right half of this chart, Each year, you're going to peak right about now on median price. And the second half of the year, the price is going to continue to soften. There aren't as many buyers typically in the second half of the year. You also don't have as many sellers. And of course, you've just got a lot of inventory. The stuff that hasn't sold yet has to work its way through the system. And so typically you're going to see the prices come down the second half of the year. We saw that in 23, 24. Maybe you can see a little peak right here. Maybe that's our peak for 2025. So we're going to have to watch that. But what's happened is the peaks have gotten softer. So we've stayed above the 400,000 median home value on the low end, but the peaks on the high end have softened. So if we go back to 2023, we peaked around 458. If I go back to 2024, it was around 453. If I go to this year, we were about 446. So again, just we haven't been able to like see appreciation for the last 3 years. So that is historic sales price trend. We're going to have to see how much of this is so much inventory. Maybe we get a catalyst that helps kind of keep buyers buying through the second half of the year. That would help sellers. But if we continue to have high rates or just anemic interest, it's going to be interesting to see if that median home price by the end of the year dips below 400,000. That's what we need to pay attention to there. All right, let's go to Redfin. So according to Redfin, this is national, home prices will fall about 1% year over year in the fourth quarter. So what they're seeing is Austin has already been in, let's call it a housing decline for 3 years. But nationally, a lot of these markets are just now starting to peak and see their inventory climb to where it's shifting from a seller's market to a buyer's market. So, they've seen appreciation in the first quarter. They're predicting we're going to finish out the second quarter about 2%. Maybe the third quarter, it's pretty flat over last year. And then we start to see some decline. So anyways, they're watching that. This is national. I think national markets are behind Austin. I think Austin's kind of ahead in terms of how they've already had to do pretty significant price correction from the pandemic. So we're going to see how that plays out. One other thing that they noted, mortgage rates expected to remain around 6.8%, at least through the end of this year. Really almost no change through the whole year. So let's talk about mortgage rates. Are they wrong? Nope, they're probably right. So we're at 6.97% right now. And again, it'll fluctuate depending on your credit score. But pay attention to that. We've got mortgage rates still. I think we're going to continue, unless some big changes happen, continue to waver between 6.5 on the low end, maybe up to 7.5 on the high end. And we just, 7, that is kind of the sweet spot of where things like to keep. It's like a magnet, just keeps pulling that rate back to that spot. So be prepared. That's what you're likely going to be paying on your mortgage through the rest of 2025. All right, well, let's get some good news. So Austin was ranked number 2 nationally for new corporate headquarters, and that is no small feat. Texas obviously is dominating. Dallas was number 1. And Austin was number 2. So if we look at Dallas, which by the way is 4 times larger than Austin, Dallas-Fort Worth is massive, probably has 7 or 8 million people. We've got like 2.5. But anyways, they had 100, Dallas had 100 headquarters move there between 2018 and 2024. But even though we're a quarter of the size, we had 81 headquarters move to Austin in that same time period. We were number 2. And Nashville was number 3, but they only had 35. Not that that's low, still a lot, but we were 2.5 times Nashville. And so we're crushing it in terms of companies moving here. The reason you haven't felt it yet, some of these companies are smaller, number 1. And number 2, a lot of them are tech, and we're in kind of a tech slowdown at the moment. I think we're going to see that ramp up when the next market cycle kicks in. So pay attention to that. But Austin is doing fine. We've still got lots of population moving here. We still have a lot of companies moving here. The towns that lost the most are San Francisco, LA, and New York. So think those expensive coastal cities. Where are they going? They're probably coming to Texas. They're coming to Nashville. They're coming to markets like that. So if you are a seller right now, I think we have peaked on price. We are peaking on inventory. So you've got to be very sensitive to your list price, because buyer activity typically always slows down midsummer. It gets hot. People go on vacation. There's just not as much energy. And so pay attention to that. We're going to start to see the median home price of the market start to go down the second half of this year. Again, unless there's some different catalyst. If you're a buyer right now, peak inventory is your friend. This means you have the best opportunity of probably the rest of this year to get into the neighborhood that you want to get into. This is when the most homes are going to be available for sale in any one neighborhood that you might be interested to check out. So if you're buying right now, I think the next 2 or 3 months are going to be a nice sweet spot for you. Anyways, hope this video was helpful. Make sure to check out our YouTube channel each week at Ryan Kelly Group and click that subscribe button so you can follow us. And of course, if you know somebody looking to buy, sell, invest, or finance here in Austin, we'd love the opportunity to visit with them and make their dreams come true. Anyways, hope you enjoyed this video, and we'll bring you another one next Monday. Thanks.